Is Omicron done and dusted for the stock market? Has the RBA's 2024 promise ended up like most promises, broken? And what's happened to Magellan? I'm Peter Switzer, he's Paul Rickard, and we're mad about money. Well, Paul, the Moderna share price fell 15% last night. United Airlines up 8%. Is the Omicron threat to the stock market done and dusted?
Don't think it's done and dusted, Peter, but look, like all these things, we're going to learn to live with COVID. There'll be something after Omicron. I'm learning more about the Greek alphabet all the time. I didn't know it had 24 letters in it, Peter, and Omicron, I think, is number 16. Don't know what that means when we get to 24, what they do next. But look, I think it's one of those things that the market will learn to live with. I think the data out of South Africa is encouraging. It's obviously spreads more, but it's not as serious, and we'll move on. But market needs excuses for a correction. That's what we've sort of been having. I hope it's done and dusted.
I hope Omicron proves to be the weakest, most gutless version of COVID-19 in the history of COVID-19. But I do worry about my colleagues in the media. What are they going to do, Paul, if they're counting all these viruses and they haven't got deaths to make us really scared? But then we'll say, shut up, it's not scary. That's my biggest hope. I hope it works out that way. Let's go to the RBA now. The 2024 promise. What's happened to that, Paul?
Well, interesting, like with the statement yesterday, Peter, they look, there's no mention of 2024 in the statement. In other words, the RBA, which had been saying, we won't even consider raising interest rate till 2024 at the earliest, somehow 2024 has gone. It's over. So I think they're just now seeing sense. The market expected probably an interest rate increase late next year. That's 2022, folks, not 2024. The RBA, I think, is just realising the writings on the wall. So if the economy picks up, we get a bit more pressure around wages and inflation, which I think is starting to happen. Interest rates, they can't go any lower, Peter, so they've got to go up. And I think the RBA is just acknowledging the reality of the situation. A promise, yes, but not really. It's broken like most promises.
Yeah, and the interesting thing is that if Omicron does prove, we're wrong, that it is actually a serious one, well, then interest rates will be delayed. But I think even the fact that we saw bond yields, well, they did actually fall in America. Do you think they'll reverse, Paul, as a consequence of not worrying about Omicron?
I think the market will get back to worrying about inflation again, get to worrying about the US budget deficit. I mean, it really was a flight to safety. I mean, you got to remember that there's a lot of markets don't always do what we expect, Peter. In the bond market, we can look at inflation and worry about the supply of bonds, but if there's lots of demand, then the old sort of supply and demand equation rules, and sometimes that's what happens in a bond market, like it does in the share market. So, in theory, everyone thinks the US bond rates should go up, but they've you have to say over the course of the year they haven't gone up much so far. Yeah. And maybe that trend just returns a little bit.
Yeah, I guess the bottom line is the short-term movers probably don't really tell the truth. It's ultimately the trend. The trend is up, but it's not vicious. And this probably makes a lot of sense because we don't think interest rates are going to rise rapidly anyway. They'll rise, but not rapidly.
Yeah, and look, and as you pointed out, Peter, look, the central banks, both the US Fed, the Australian Reserve Bank, just going to be talking about interest rates, might be on the way up at some stage. They're still being incredibly accommodative. That is, they're trying their utmost to get the economies to grow, get back to full employment, and actually get some inflation and wage pressure. So they're not suddenly going to change tack. Now, they've got to be a little bit careful. And, silly promises like 2024. I think everyone always thought that was a bit of a dumb idea. But what they really wanted to say is we're serious about trying to get wage growth. And again, they've shown that. So not surprising either abandoning their so-called promises, Peter. But again, interest rates, I think it's going to be more a steady trickle up. It's not going to be we're not heading for a catastrophe in higher interest rates.
You got to remember, Dr. Phil Lowe's name is Lowe. Keeping interest rates low is something that just goes with the name. It's like a butcher whose name is Butcher, a baker whose name is Baker. But anyway, that's another story. What about?
I'm glad you moved off that, Peter.
Yeah, I want to go very, very anywhere that was going to be any funny. But let's go to Magellan now. This has been one of the best fund managers the country's ever seen. Hamish has had one bad year. and everyone seems to be piling in on Magellan. What's your take, Paul?
Well, not really sure. The news yesterday, of course, was the resignation of the CEO. There's not really a lot behind that we can actually say, but
Been there a long time, hasn't he?
yeah, look, I mean, I think they're under pressure because of investment performance. They're under pressure because, there are some financial planners who like to sort of wield a bit of power out there and move from one fund manager to the next. So everyone's really hot and Pinnacle, they're the next best fund manager out there. And so there's lots of funds moving in there. And that causes problems. I've always been a little bit, I've warned people, don't get carried away about the funds management industry because there are two mega trends occurring. One is the pressure for lower fees. That pressure has not gone away. So you've got to say there's headwinds. And secondly, there's a lot more competition out there. So it's harder. We've got index funds are growing, the whole debate index versus active. It's just not necessarily a one-way street. Just because you manage someone's money doesn't mean it's a license to print money. And you've got to have two things going for you, distribution and performance. If your performance goes off of the boil a little bit, which Magellan's has, so does the share price. And now we're losing a CEO. So there might be some value in the stock under $30 where it closed yesterday. But again, I think there are probably still better companies out there than. I just think the industry itself has got some challenges, Peter.
My betting is that he will have a good year. So the funds themselves will do a lot better than the previous year where he was too conservative, with the virus. But you're right, it might take time for the share price to go. But I guess if his funds start performing again, the advisors will come back and that will help the share price. But it's not going to happen overnight, is it?
It's not. And he's not getting much broker support. Remember that Magellan, of course, is the company that's bankrolled Barrenjoey Capital, right? Who've made life really tough for all the big brokers out there because they took a lot of staff and they've got right into the mandates. Barrenjoey is now one of the leading investment banks and Magellan is the company bankrolling that. So when you're doing that, don't expect too much support from the broker analysts and other people in the industry because, they're eating their lunch a little bit. So he's done a few things that, some of the fund managers and other people who invest in Magellan may have been a little bit critical. Why did they expand to that? Why have they bought a big stake in the Mexican food chain, Guzman y Gomez? Some interesting type of things that necessarily were outside the Magellan cup of tea. So I think, not a lot of support for him. Don't expect an immediate turnaround. I've been warning people about this share price for a little while. Yeah.
So interesting that you bring up the Mexican lunch because everyone's been accusing Hamish of eating their lunch as well. So nice little segue. I'm Peter Switzer. He's Paul Ricardo. We're mad about money.